Should you buy off-plan or invest in a property that's already been delivered in Dubai? If you're interested in real estate investment in Dubai, you've probably already spoken with a real estate agent who suggested you buy off-plan. And just like I did when I started out, I imagine you have a lot of questions. You wonder if it's really worthwhile or if these agents are just thinking about their commission. It's one of the first questions you ask yourself when you consider investing in Dubai, isn't it? To answer it, I'll draw on my 10 years of experience in the real estate market here, and I'll share with you concrete examples based on reliable and transparent figures. In this video, you'll find out whether off-plan investment in Dubai can really be a winning strategy, and above all, whether this approach suits your profile and your goals. Are you ready? All right, let's get started. Make sure to stay until the end. I'll share with you the strategy I use to maximize my chances of making a profit. If you're discovering me in this video, my name is Agada. I've been living in Dubai since 2013, and I've been investing here in off-plan buy and sell projects for over 10 years. On this channel, I share all my tips and experiences with you to help you be profitable in this unique market and avoid common pitfalls. And if, like me, you're tired of dream sellers and made-up numbers and you're looking for concrete and honest information about off-plan real estate investment in Dubai, subscribe so you don't miss any of my upcoming tips. If you're European like me, you probably see off-plan or new-build real estate as not very profitable. And that's normal because in Europe, the market is based on an aging real estate stock. To make money, the magic formula is to take on debt, renovate, or even split up properties. But here in Dubai, it's a whole different story. We're in a cash market, a market where very few bank loans are used. Why? Because Dubai is a city that's constantly evolving, and what holds value here is new construction. As a result, more than 2/3 of real estate transactions are for off-plan projects. Investors aren't looking to renovate old buildings, but to capitalize on the market's rapid growth and innovation. And it's this fundamental difference between the European market and the Dubai market that makes the opportunities here unique. And I'm going to explain to you why investing in off-plan properties can be extremely advantageous in this context. Before we get into the details and take a deep dive into the advantages of buying off-plan, let's take a quick detour to look at why buying a property that's already been delivered can also be an interesting strategy. Because let's be clear, it's not necessarily a bad option. The main advantage, and I would even say the only real advantage of buying a completed property, is that you get immediate rental income. When you have a sum of money available, this strategy might seem obvious. You buy something that's already delivered, you start collecting rent immediately, and in 4 or 5 years, once you feel you've recouped enough of your investment, you sell it. This is a perspective that works, and it's real. But once again, this strategy is based on a very European view of real estate investment. In Europe, we have an aging real estate stock, and property appreciation is often gradual but slow. In France, for example, the average annual capital gain on real estate is between 1% and 4%. That's why, as an investor in Europe, we focus heavily on rental income and the concept of rental yield. In Dubai, it's the complete opposite, and that's why you'll need to unlearn everything you know about real estate investing to fully take advantage of the opportunities offered by Dubai's property market. Here, we're in a rapidly growing market where the capital gains generated by the swift increase in property values are often much more significant than rental income. Here, profit comes from capital gains, as we see property values increase by 10 to 20% per year, depending on the neighborhood. And it's with off-plan properties that you'll get the best returns on investment. In just a moment, I'm going to explain to you exactly why buying off-plan is a much more powerful strategy in a market like Dubai. You'll see it's an approach that completely changes the way you think about real estate investment. If there's one thing to remember about real estate investment in Dubai, it's that the real profit comes from capital gains, not rental yields, even though those are much higher than what you can get in France. For your information, here in Dubai, rental yields generally range between 7 and 9% for long-term rentals, which is already extremely attractive. But what changes everything is the ultra-favorable tax environment. In Dubai, there is no property tax, no tax on rental income, and no capital gains tax when you sell. This means your gross rental income is actually your net income. The only thing you have to pay as a property owner are the co-ownership fees, which are called annual service charges. So it's a market where not only do you benefit from relatively high rental yields, but the simplified tax system allows you to optimize your profits and above all, to capitalize on the city's rapid growth through capital gains. And that's what makes all the difference. Now, I think you've clearly understood that in Dubai, the real key is capital gains. And so that's the point we're going to focus on. I'm going to explain how buying off-plan can maximize your return on investment and why it's a much more powerful strategy than buying a property that's already been delivered. By buying off-plan, you'll have the opportunity to purchase in an area that hasn't yet reached its peak in terms of maturity, where price increases will be the most significant. I'm thinking of neighborhoods like Business Bay or Dubai Creek Harbor, for example. In these two neighborhoods, the price per square meter has more than doubled in 4 years. When you buy an apartment off-plan, you lock in the price at that specific moment. For example, in 2024, you set a price based on the current market value. But in Dubai, since the market is constantly growing, this price is generally much lower than what the property will be worth in 2026, 2027, or 2028 at the time of delivery. Let's take a concrete example. You buy an off-plan apartment today in 2025 for 1 million euros. To reserve it, you only need to pay 24% of the total price, which is 240,000 euros. 20% as the initial deposit, and 4% as acquisition fees that you pay to the Dubai Land Department. Once the price is locked in, you benefit from the property's appreciation over the years. Now let's see what happens if you choose to buy a property that has already been delivered. It is not recommended to buy a property at the time of delivery if you are an investor, because that's when it is at the peak of its value. So your choice will rather be for a property that is 4 to 5 years old. With a delivered property, the increase in value is often much slower or even non-existent. In Dubai, older properties, meaning those that are between 5 and 10 years old, are seen as obsolete, and you'll quickly understand why. So you buy a delivered apartment at the same price, 2 million euros or 1 million euros. But this time you have to pay 100% of the price immediately, plus acquisition fees, which comes to 1,060,000 euros. 1 million for the property, 4% in Dubai Land Department fees, and 2% in real estate agency fees. On the other hand, in this case, you tie up 1,060,000 euros for a property whose value may stagnate or even decrease while generating a rental yield of 7 to 8%. On the other hand, with an off-plan purchase, you benefit from the leverage effect created by the payment plan. You have only paid 240,000 euros to secure a property that costs 1 million euros. Let's assume the market continues to grow at a rate of 20% per year, which is common if you buy in a high-growth area and in a quality project. At the end of the first year, your apartment will have gained 200,000 euros in value, 1 million plus 20%, while you will have only spent 240,000 euros. As a result, your unrealized capital gain of 200,000 euros represents an impressive return on investment of 83% on your initial outlay. To make this really clear, I've prepared a small comparison table for you. On the left, you see the financial simulation when buying off-plan, and on the right, when buying a completed property. So, when you buy an off-plan property for 1 million, you'll pay 240,000 dirhams in the first year, which corresponds to 20% reservation fees and 4% registration fees. In the second year, 440,000 euros, and in the third year, you will have paid 640,000 euros just before delivery. On the capital gain side, we apply a 20% increase per year in line with current market figures on the total value of the property, that is 1 million. So in the first year, we will generate a latent capital gain of 200,000 euros as well as in the second and third years. So, at the end of the 3 years, when we're on a 60-40 payment plan, which is the most common at the moment, we will have financed 60% during construction and will have 40% left to pay at the time of delivery, which we won't pay because we'll sell at that point. So, in total, we will have paid 640,000 euros and will have made a return on investment of 600,000, which represents 94% over 3 years. On the other hand, I did 2 simulations, one in which there is no capital gain at all if you buy something that is more than 5 or 10 years old. And on the other hand, I was extremely optimistic. I said to myself, come on, let's buy a property that's already delivered, sure, but still in good condition. And so I applied the same value appreciation plus the rental yields. In the scenario where there is no capital gain, we have rental yields of 7% in the first year, and I applied a 5% annual increase. Which means that in terms of rental income, in 3 years, we will have earned 220,000 euros, which corresponds to a 21% return on investment over 3 years. That's already not bad. If we do have a capital gain that occurs at a rate of 20% per year, and we add the capital gain to the rental income, we would have a return on investment of 77% over 3 years, which is already very, very good. But it's incomparable to what we would have gotten on the same property if we had bought it off plan 3 years ago. As promised, I'm coming back to a particular feature of the Dubai market that is fundamental to understanding this market. Here, real estate properties depreciate relatively quickly. Why? Because there are always new projects being delivered with more modern standards, whether in terms of design or energy efficiency. These new projects better meet the expectations of the market, which can quickly make slightly older properties less attractive. And that's another reason why investors prefer to buy off plan. Not to mention the amenities, right now we're seeing a lot of outdoor cinemas or paddle courts because that's really trendy today. But in a few years, we'll certainly see something else arrive that we can't even imagine today. My advice to avoid depreciation and the key to maximizing your real estate profit in Dubai is to keep your assets moving. That means avoiding holding onto a property for too long, because depreciation often starts to be felt about 5 years after delivery. Of course, if you invest in highly sought-after areas like downtown Marina or Palm Jumeirah, depreciation will be slower. In these neighborhoods, you can consider holding onto properties for up to 10 years before the value starts to decline. Why? Because these areas benefit from relative scarcity and strong, consistent demand, which protects your properties from rapid depreciation. But let's get back to what interests you most, your investment. The time when you make the most money after buying off plan is usually at the time of delivery. At this stage, your property is brand new, meets the latest standards, and there is strong demand from two types of buyers. Individuals who are looking for a property to move into immediately and who couldn't wait 2 or 3 years for construction, or who couldn't buy off plan due to lack of financing since you can't get a loan to buy off plan. But also investors who want to take advantage of a new property to rent it out or resell it in a few years before it starts to depreciate and who didn't have the cash available to buy off plan. And these are the reasons why property prices skyrocket at the time of delivery. Because it's new, immediately available to rent or live in, and above all, it becomes eligible for bank financing. If you still want to generate rental income for a few years before reselling, you can keep the property in the short term, but it's better to sell it before it reaches the 5-year mark. Why? Because from that point on, new projects delivered to the market will start to overshadow your property, especially if it's not in an ultra-central neighborhood. To conclude, I promised you an unbeatable tip to maximize your gains and protect your investments. Here it is. In Dubai, real estate is a dynamic market that rewards a proactive strategy. It's nothing like the European model where you keep a property for 20 or 30 years. If you buy off-plan, consider selling at the time of delivery or using the property for a maximum of 3 to 5 years before selling it. This allows you to maximize your capital gain while minimizing the risk of depreciation. Once again, it's not an exact science. Some properties in premium locations can be held longer without losing too much value. But as a general rule, real estate in Dubai is a market where quick turnover is often the best strategy to maximize your profits. If you need personalized advice or help implementing this strategy, contact me directly and I will be happy to support you with your project. And who knows, maybe one day I'll be sharing your success story here, telling how much profit you made thanks to your off-plan investment in Dubai. Thank you for watching this video. Don't forget to subscribe, like, and share if you found this useful. And I'll see you very soon for another video about real estate in Dubai.